Now next is common size statement. Next topic is, or next chapter is common size statement. In common size statement, we prepare the common size statement of balance sheet as well as common size statement of profit and loss. In the common size statement, suppose we are going to prepare the common size statement of balance sheet, total of assets or equity and liability will be taken as 100 as base, 100 as base, and accordingly percentage of each and individual item of assets and liability will be calculated and will expressed in terms of percentage of each and every item in the balance sheet. So total of assets or total of equity and liability will be taken as 100, and thereafter we will calculate the percentage of each and every heading and subheading under the balance sheet, common size balance sheet. Similarly, when we are going to prepare the common size statement of profit and loss, then revenue from operation will be taken as 100, and thereafter we will calculate the percentage on the basis of that of each and individual line item. Okay, so common size balance sheet, heading will be common size balance sheet. We will write the name of the company as at 31st March. Here I have written the date, year 2016-17, 16-17. So in particular side, we will write the particular side in the same format, in the format which is given under schedule 3rd part 1. In the same format, we will write the figure in the particular side. Is it clear? Schedule 3rd part 1 of the Companies Act 2013. So share equity and liabilities is number 1. Under that, shareholders fund, non-current liability, current liability, assets, your non-current assets, current assets. Under non-current assets, which are the assets? Under non-current, under the current assets, what are the non-current assets? We have to write in sequence, and we will write the figure of the previous year. Suppose previous year is 2016 and current year is 2017. We write the figure, okay, amount, and do the total. This particular and absolute amount of 2016-17, when you write the previous year figure and current year figure, you will face no problem at all. You write this one as per schedule 3rd part 1 of the company account 2013 as per the prescribed format for the balance sheet. And here you write the relevant information, relevant figure: share capital 2 lakh 40, 3 lakhs, reserve and surplus 70, 80, and so on, which is given in the question, So common size statement are those in which the individual figures are converted into percentage to some common base. Common base means taken as 100. A common size balance sheet, as I told you, is a statement in which the total assets or equity and liability will be taken as 100, as base 100. Liability assumed to be equal to 100, and all the figure are expressed as a percentage of total. So the format is particular, note number, absolute amount of the previous year balance sheet and current year balance sheet. This is for percentage of balance sheet total. So total will be taken as 100. We'll write 100 over here, and this will be calculated in terms of percentage. Here also 100, and we'll calculate in terms of percentage. So this 2 column is for percentage of balance sheet 2016. This is 2016, and next one is for 2017. 2016, this is related to this percentage and related to this year 2017. So 2016 percentage will be here, and 17 percentage will be here. Taking the total assets will be taken as, or total liability will be taken as 100 as base. It's very simple to calculate. It's very simple to calculate. Now see one question based on common size balance sheet. So question is, following data is derived from the books of X Limited. So I have written over here common size balance sheet of X Limited. Particulars information is given in the question, particular, and 2 columns for the amount. First column is for 31st March 2017 and second column is for 31st March 2016. So 16 we will write first and 17 we will write next. Mean previous year and current year. Okay, 16 information of 16 figure we will write first, thereafter we will write the information of 17 figure. So this is drawn in the vertical format. This is the vertical format. Balance sheet is always drawn in vertical format. So common size balance sheet will also be drawn in a vertical format. So the informations are share capital, reserve and surplus, trade payables, trade receivables, short-term provision, fixed assets, long-term provisions, current liabilities, inventory, cash and cash equivalent. After going through this detail in the particular, you see which item is related to which heading. For instance, share capital and reserve and surplus is the part of shareholders fund. These are part of shareholders fund. Thereafter, trade payable. Trade payable is a current liability. This comes under the current liability. Trade payables, you write under the trade receivable. It's a current assets. Trade receivable here. Thereafter, short-term provision, it's a current liability coming under the current liability. Thereafter, the fixed assets, it's a non-current assets. Thereafter, long-term provisions. Long-term provision is a non-current liability. Long-term provisions coming under the heading non-current liability. Thereafter, current investment comes under the current assets, current investment. Thereafter, inventory is also under the current assets. Thereafter, cash and cash equivalent, this also come under the current assets. So you draw this one as per the schedule 3rd part 1 of the balance sheet. You draw the balance sheet accordingly as per the prescribed format, and relevant information you write it over here. Okay, so share capital is 2,40,000 in 2016 and 2017 it is 3 lakh. Reserve and surplus in 2016 it is 70, 2017 it is 80. Long-term provision in 2016 65 and 80. Trade payable in 16 it is 1,10,000 and in 2017 it is 1 lakh. Short-term provision in 2016 15, then it is 2017 40. Do the total, it is 5 lakh. Total of this side is 2016 total is 5 lakh, 17 total is 6 lakh. This is the total equity and liability. Thereafter come to the assets, non-current assets, fixed assets. In 2016 fixed assets given in the question is 2,30,000 and 2017 it is 2,90,000. Thereafter you come to the current assets. Current assets, current investment 8,000 and 10,000, inventory 72 and 1,01,000, trade receivable 1,80,000 and 1,90,000, cash and cash equivalent 10 and 9,000 respectively. Total of this assets is 5 lakhs and liability total assets is in 2017 is 6 lakhs. So 5 lakh, 5 lakh, 6 lakhs and 6 lakhs. Okay. Thereafter, now actual work start. You take 100 as 100 base. Total equity and liability will be taken as 100. This 100. Similarly, total assets will be taken as 100. and thereafter we will find out the individual item. So we start with the 2016. First 2016, thereafter 2017. Now 2016, your share capital is 2,40,000. 2,40,000 is your share capital. I am doing the working this side, 2,40,000. It's a working note. It's a working note. Okay, it's a working note. Or you can say it's a rough even. You can do it in the rough. 2,40,000 and total assets is how much? Total equity and liability is 5 lakhs. 2,40,000 upon total equity and liability is 5 lakhs. Share capital is 2,40,000 and total equity and liability is 5 lakhs. So, we will calculate the percentage of this. Percentage is it is 48%. It is 48%. It is 48%. Okay. Now 70,000 is the your reserve and surplus is 70, and here it is how much? It is 48%. Okay, 70 and total equity and liability is 5 lakhs into 100. So this is 1 2 3 4 4 2. It is 14%. It is 14%. 14. Is it clear? It is 14%. Okay. Next is 65,000 is the total. 65,000 is the long term provision and total equity and liability is 5 lakhs into 100. Okay, into 100. Is it clear? Into 100. So it is 13%. It is 13%. 13. It's a 13%. Next is 1,10,000 is your trade payables. Trade payable is 1,10,000 divided by total equity and liability is 5 lakhs into 100. Okay, into 100. So it is 22%. 22%. Right? 22%. Thereafter, short term provision is 15,000 upon total equity and liability is 5 lakhs into 100 into 100. So it is 3%. It is 3%. When you do the total, this will become 100. 8 plus 4 12, 12 plus 3 15, 16 17, 17 or 3 20, 0, 2 carry 6, 7, 8, 9, 10, 100. It means total equity and liability is 100. As compared to that, the shareholders share capital is 48%. Share capital in comparison to total equity and liability is 48%. Reserve and surplus is 14%. Long term provision is 13% of the total equity and liability. And trade payable is 22% of the total equity and liability. And short term provision is 3% of the total equity and liability. Okay. This is expressed in terms of percentage to total equity and liability in the asset side. Now come to this side, this one, this side, asset side. Okay. Now assets in 2016 is 2,30,000. Fixed assets is 2,30,000 upon total assets is how much? 5 lakhs. So 2,30,000 upon 5 lakhs into 100 into 100. Okay. So it is 46. It is 46. Now come to the current investment is 8,000 and total equity and total assets is 5 lakhs into 100 into 100. Okay. So it is 1.6. 1.6. 1.6. okay, 1.60. Now coming to this, inventory is 72,000 and it is 5 lakhs, total assets is 5 lakh into 100, okay, so it is 14.40, it is 14.40. Now come to the trade receivable. 1,80,000 is the trade receivable and total assets upon total asset, which is 5 lakhs into 100. So it is 36%. It is 36%. Okay. Now come to the cash and cash equivalent, 10,000 upon 5 lakhs into 100. So it is 2%. It is 2%. Okay. Now you do the total. 1, 7, 8, 8, 9, 10, 20, 6, 7, 8, 9, 10, 100. So it comes 100. It means in comparison to total assets, fixed assets percentage is 46%. In comparison to total assets, your current investment is 1.6%. In comparison to total assets, inventory percentage is 14.40. Similarly, trade receivable is 36% and cash and cash equivalent is 2%. Now come to the figure of 2017. The same way we do the calculation for the year 2017. So for 2017, we will see this line. This is the line of 2017. Take it 100. Total will be taken as 100. Now start calculation. 3 lakhs is the share capital and total equity and liability is 6 lakhs into 100. So it's a 50%. It's 50%. Now come to here, 80,000 is the reserve and surplus and 6 lakhs is the total equity and liability into 100. Okay, into 100. So it is 13.33. 13.33. It is 13.33. Similarly, 80,000 upon 6 lakhs, 13.33. 1 lakh upon 6 lakhs, total equity and liability 6 lakhs into 100. So it is 16.67. 16.67. Is it clear? 16.67. Now coming to 40,000. Short term provision is 40,000 upon 6 lakhs into 100. Into 100. So it is 20 by 3. It is 6.67. 6.67%. 6.67%. So you do the total, you will find it is 100. If you have done any mistake, this won't be 100. So if your calculation is right, then it becomes 100 because the 100 is taking as a base. Now coming to the next asset side of 2017. Asset side 2017. So this is the 2,90,000. 2,90,000 is what? Fixed assets is 2,90,000 and total assets is 6 lakhs into 100. Into 100. Okay. So it is 48.33. It is 48.33. Now come over here. 10,000 is the current investment, 10,000 in 2017, and total assets is 6 lakhs into 100. So it is 1.67. 1.67. Now it is 1,01,000. 1,01,000 is what? Our inventory in 2017. Total is 6 lakhs into 100. So 101 by 6. 101 by 6. So it is 16.83. Now coming to 1,90,000. 1,90,000 is your trade receivable, and total is 6 lakhs. Total assets is 6 lakhs into 100. Okay. So it is 31.67. 31.67. Now coming to here, 9,000 upon 6 lakhs into 100. So it is 1.50. So this total will be 100. So in comparison to total assets, the fixed assets percentage is 48.3, current investment percentage is 1.67, similarly inventory percentage is 16.83, trade receivable is 31.67, and cash equivalent is 1.50. So we'll calculate the percentage taking 100 as base. Total equity and liability will be taken as 100, total assets will be taken as 100, and accordingly we'll calculate the each and every percentage of the item. For 2016, percentage will be here, we will write. For 2017, we will write the percentage in this column. Is it clear? So this is common size balance sheet. Now see the next question of common size balance sheet. Here the 2 years is not given, but the 2 company is given. So we will prepare the common size balance sheet of 2 companies. Instead of 2 year, we will prepare the common size balance sheet of 2 companies. So prepare a common size balance sheet and comment on the financial position of A Limited and B Limited. There are 2 companies, A Limited and B Limited. Balance sheet of A Limited and B Limited as at 31st March 2018 are given below. So the balance sheet is given. Here it is, the balance sheet is given in the prescribed format as per Schedule 3rd, Part 1 of the Companies Act 2013. So common size balance sheet of A Limited and B Limited, heading will be common size balance sheet of A Limited and B Limited, and as at 31st March 2018. So format is same, particular, note number, absolute amount. A Limited, we will write the figure of A Limited, B Limited, absolute figure, and then percentage of balance sheet total A Limited, and this is for B Limited column. Okay, So total will be taken as 100. Total will be taken as 100. And thereafter we will calculate the percentage. So first of all, we start with this A Limited. A Limited share capital is 4 lakhs. I am doing it in the working note. This is working note. And total equity and liability is how much? It is 10 lakhs. It is 10 lakhs. So 4 lakhs upon 10 lakhs into 100. So it is 40%. It is how much? 40%. So write the 40 over here. It's 40%. Similarly, your reserve and surplus is 2 lakhs for A Limited, and total equity and liability is 10 lakhs into 100. So it is 20%. So write 20 over here. Here it is 3 lakhs. Your current, non-current liability 3 lakhs upon total equity and liability 10 lakhs into 100. So it is 30%. 30%. Now it is current liability is 1 lakh upon 10 lakhs is the total equity and liability into 100. So it is 10%. 10%. Is it clear? 40, 20, 30 and 10. So this is 100. This is 100. Now come to here. 4 lakhs is the non-current assets and total assets is 10 lakhs. Total assets is 10 lakhs into 100. So it is 40%. This is what? This is 40% for A Limited. Now 6 lakhs is the current liability, current assets is 6 lakhs upon total assets 10 lakhs into 100. Total assets is how much? 10 lakhs. 6 lakhs upon 10 lakhs into 100. So it is 60%. 60%. Okay. Now come to B Limited. So for B Limited we have to see this side. Column of B Limited. We will see the figure of B Limited. Second line. This line. 5 lakh 40 is the share capital and total is 12 lakhs. Total equity and liability is 12 lakh into 100. Okay. 12 lakh into 100. So 270 upon 6 45%. It is 45%. 45%. Now 2 lakh 60. It is 45%. Okay. 45%. Now 2 lakh 60 is the reserve and surplus and total is 12 lakhs into 100. So it is 21.67. 21.67%. 21.67. You can calculate it as well. 130 upon 6. Okay. 21.67%. Is it clear? Next is 2 lakh 50. Non-current liability is 2 lakh 50 upon 12 lakh. Total equity and liability into 100. Into 100. Okay. It is 20.83. 20.83. So write the 20 point. This is 21.67. 20.83. Okay. Now next is 1 lakh 50 current liability upon 12 lakhs into 100. Current liability of B Limited is 1 lakh upon 12 lakh into 100. So 50 upon 4. 50 upon 4. So this will be 25 by 2, 12.50. 12.50. So total must be 100. You can verify it. Okay. Now here 7 lakhs is the non-current assets divided by total assets is 12 lakh into 100. So this is 58.33. It is 58.33 is the non-current assets, whereas the total, if it is 100, then as compared to the 100, it is 58.33 percentage is the non-current assets. Now see the current assets. 5 lakhs upon 12 lakhs total assets into 100. So 5 lakh upon this, so it is 125, 41.67, 41.67 percentage. So it means what? Equity and liability, your share capital is 40% of the total equity and liability. 20% reserve and surplus of the total equity and liability, and so on, 30 and 10. In asset side, 40% is the non-current assets of total assets, total assets is 100. So non-current assets is 40% and it is 60%, and in B Limited it is 58.33% and here it is 51.67%. Is it clear? So this is common size balance sheet. Common size balance sheet of A and B Limited. A Limited and B Limited. And as at 31st March 2018. This is 18 for 1 year. But company is 2. We are comparing the two company A Limited and B Limited, through the common size balance sheet. Coming to the next question, common size statement of profit and loss. We will prepare the common size statement of profit and loss. Here the revenue from operation will be taken as 100. Revenue from operation will be taken as 100, and accordingly we will calculate the percentage of each line item, each item. So the question is, prepare a common size statement of profit and loss from the following information and interpret the same. So statement of profit and loss information is given for the year ended 31st March 2018 and 31st March 2017. So first we will write it 31st March 2017. Thereafter we write the 31st March 2018. So figures are revenue from operation, items are revenue from operation, other income, cost of material consumed, finance cost and other expenses. Okay. So this will be prepared in the same manner in a prescribed form, in a prescribed format as per Schedule 3rd, Part 2 of the Companies Act 2013. So format will be same. Common size statement of profit and loss will be the heading. For the year ended 31st March 2017 and 18, particular note number, absolute amount of, we'll write the amount, absolute amount of previous year and current year. So previous year is 2017, 31st March 2017 and it is 31st March 2018. This is for 2017 and this is for 2018. Here in percentage of balance sheet, instead of percentage of balance sheet, we will write percentage of revenue from operation, revenue from operation. Is it clear? Revenue from operation, okay, I'm just extending this line. Revenue from operation, okay, revenue from operation. Is it clear? So 2017, okay, percentage, and from here I am going to divide it for 2018 percentage. Is it clear? 2017 and 2018. So percentage of revenue from operation. In balance sheet we write percentage of total assets. Here we will write the percentage of revenue from operation when we are going to prepare the common size statement of profit and loss. Is it clear? Now revenue from operation is 20 lakhs for the year 2017. It has given 20 lakhs and in 2018 it is 25 lakhs. Other income is 1 lakh. In 17 and 18 as well it is 1 lakh. So total income is, total revenue, third number is 21 lakh in 2017 and 26 lakhs in 2018. Okay. Now less expenses. Cost of material consumed 14 lakhs and 2018 it is 17 lakhs. Finance costs 1 lakh 60 and 2 lakhs respectively. Other expenses 1 lakh 40 and 1 lakh. Total of the three is 17 lakhs and here it is 20 lakhs. So difference we will find it out. Total revenue is this and total expense is this. So third minus this fourth total is here. Third minus fourth. Third total is this, fourth total is this. So 21 lakh minus 17 lakhs, it's 4 lakhs is the net profit before tax. 26 lakhs minus 20 lakhs, it's 6 lakhs net profit before tax. If the tax will be given in the question, then we will write in the 6 less tax and thereafter 7 will be profit after tax. Okay, profit after tax. This is the format of statement of profit and loss as per Schedule 3rd, Part 2. Okay. So according to that format, we will prepare it. Now come to the percentage calculation of percentage. So total revenue from operation will be taken as 100. Revenue from operation will be taken as 100. Now we'll calculate the percentage. This one, 1 lakh upon 20 lakhs, 1 lakh upon revenue from operation 20 lakhs into 100. So it is 5%. It is 5%. So total is 105. 105. Now we'll calculate 14 lakhs upon revenue from operation is how much? 20 lakhs. 14 lakhs into 20 lakhs into 100. Okay, so it is 70%. It is 70%. Is it clear? It's a 70%. Now 1,60,000. 1,60,000 is the finance cost and revenue from operation is 20 lakhs into 100. Okay, into 100. So it is 8%. 8%. 8%. Okay, next is 1,40,000 upon total revenue from operation 20 lakhs into 100. So it is 7%. It's 7%. Total is 85%. Total is 85%. Okay, so 105 minus 85, it is 20. Automatically you will get it is 20. You can find it out. 4 lakhs upon 20 lakhs revenue from operation into 100. Okay, into 100. So it is 20%. In the same way, we will calculate the percentage of this side. 2018. By taking the figure of 2018, we will calculate the percentage. This figure, we will take this figure. Okay. So 25 lakhs will be taken as 100. Revenue from operation will be taken as 100. It's a base figure. Now calculate 1 lakh. Other income is 1 lakh upon 25 lakhs into 100. So it's 4%. So it's a 104. Total is 104. Now calculate 17 lakhs is your cost of material consumed. 17 lakhs upon 25. This 25. Revenue from operation is 25 into 100. So it is 68%. It is 68. Then 2 lakhs is your finance cost is 2 lakhs. Finance cost 2 lakhs and revenue from operation is 25 lakhs into 100. So it is 8%. Again 1 lakh. So it's a upon 25 lakhs 4%. So total is 80. Total percentage is 80. So 104 minus 80, it's a 24%. 24. You may calculate it 6 lakhs net profit before tax upon 25 lakhs revenue from operation into 100. Okay, so it is 24%. Is it clear? So this way we will calculate the percentage. So revenue from operation will be taken as 100. This is the base figure, base percentage, and accordingly percentage of each and every line item, heading and subheading will be calculated. It's very simple to find out. Okay, it's very simple. If the tax will be there, then in 6 we will write tax, or tax will be deducted from that, and then we will write in 7 profit after tax. Now see the next question of common size statement of profit and loss. So prepare a common size statement of profit and loss from the following. The 2-year figure is given. First column is for 31st March 2018 and second column is for 31st March 2017. In particular, details are revenue from operation, purchase of stock in trade, change in inventories, other expenses, other income and income tax. Now we will arrange it. First of all, we write the heading common size statement of profit and loss of company name is not given, so just I put dash for the year ended 31st March 2017 and 18. So in particular, first one is revenue from operation, which is given over here. In 2017 it is 30 lakhs and 2018 it is 48 lakhs. Other income in sequence number 2, other income is 1 lakh. Other income is 60,000 and 72,000 respectively. Then total income is 30 lakh 60,000 and 48 lakh 72. This is the total income, total revenue. Now less expenses, purchase of stock in trade is purchase of stock in trade in 2017 it is 21 lakhs and here it is 32 lakh 64,000. Change in inventory is in minus. Minus means closing inventory is more than the opening inventory, then it will be minus. If opening inventory is more than the closing inventory, then it is plus. Otherwise, if the closing inventory is more than opening inventory, then this will reflect in minus. So it is 90,000 in 2017 and 2018 it is 1,92,000. Both figure are in negative, means closing inventory is more than opening inventory. Other expenses is 1,50,000 and 3,36,000. Now we'll do the total. We do the total of 21 lakhs and 1,50,000 and minus 90,000. So total is 21,60,000. Here also 32 lakh 64 plus 3 lakh 36 minus 1 lakh 92. So this will come 34 lakhs 8,000. This is our total expense. Now fourth number profit before tax, means third, total revenue minus total expense. This is the total expense, total revenue minus total expense. So it is 9 lakhs 48 lakh 72 minus 34 lakhs 8,000. So it is 14 lakh 64,000 is the profit before tax. Tax is 40% is the tax. So we'll calculate the tax of 40%. 9 lakhs into 40 by 100, so 3 lakh 60,000 and 14 lakh 64,000 into 40 upon 100, it is 5 lakh 85,600. So seventh one will be, your seventh one is profit after tax. Profit after tax. So 9 lakh minus this 5 lakh 40 and 14 lakh 64 minus 5 lakh 85. So 8 lakh 78,400. Now we will calculate the percentage. Percentage of revenue from operation will be taken as 100. Start with the 2017. Okay. Revenue other income is 60,000 upon revenue from operation 30 lakhs into 100. So 4020, so it is 2%. It is 2%. Okay, it is 2%. So it is 102. Now come to over here. 21 lakh is the purchase of stock. 21 lakh upon revenue from operation, which is taken as 100, is 30 lakhs into 100. So it is 70%. Here it is 2%. Here it is 70%. It is 70%. Okay, it is 70%. Next, 90,000 upon revenue from operation 30 lakhs into 100. 4020 so it's a 3%, but 3% it's a minus 3%. Next is 1,50,000 upon revenue from operation 30 lakhs into 100. Okay, so it is 5%. It's 5%. Okay, now we'll do the addition. So it is 72%. 72%. Okay, so how much this will be? 108 minus 72. Obviously this will be 30%. 30%. Okay, it's a 30%. And 40% of this is 40% of 30 is 12. So it is 18. It is 18. Okay, now come to over here. This will be taken as 100. 48 lakhs will be taken as 100. 100. Okay, now calculate 72,000 upon 48 lakhs into 100. So it is 24 into 248, 24 into 3. So it is 1.5. 1.5. Okay, so it is 101.50 is the total. Now 32 lakhs 64,000, 32 lakhs 64,000 upon 48 lakhs into 100. Into 100. It is 68%. It is 68%. 68%. Now 1,92,000 upon 48 lakhs revenue from operation into 100. It is 4%, but in minus. Now 3,36,000 is the other expense. 3,36,000 upon revenue from operation 48 lakhs into 100. It is 7%. So total will be 68 plus 7. It is 75 minus 4. So it is 71%. 101.50 minus 71. So it is 30.5%. 30.50. So we'll calculate the 40% of this. 40%. Okay, 40%. So it is 12 rupees 20. 12.20%. 12.20%. So difference will be 0381, 18.30%. 18.30%. So this is the calculation in common size statement of PL. So it's very simple. Revenue from operation, you take it 100 for 2017 and then calculate similarly 2018 100 and calculate the percentage. It's very simple. Means as compared to the revenue from operations, the other income is 2%, your purchase of stock in trade is 70%, change in inventory is -3, and other expenses is 5%, total expenses is 72% as compared to what? As compared to revenue from operations. Okay.